Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to do a review of the European stock markets in the wake of the sharp decline over the last week. But as usual, we start with our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing, or put another way, all trade decisions are your own responsibility. In other words, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. No matter what trading approach you take, there always will be losing trades. Right, let's start by looking at the DAX. This is the German stock market, and you can see here this is the sharp decline over the last week or so. But you can see we actually had a VS sell on the 20th of February. Let's see whether this was a valid sell by going to the higher time frame chart. So if you're on a daily time frame, you go out to the weekly. Remember, the higher time frame is a time frame between 3 and 5 time frames higher. So if you're on a daily chart, it would be out to the weekly. Now remember, our DPs on the chart in advance. So I'm just going to go back in time a little bit. And you can see here's the last swing into the low. There's that low there back in the end of last year. So that's the last swing into the low. So we right mouse click there, we do decision point. That gives you an area of potential resistance. As you can see, that's on the chart in advance, is there before the market even gets there. So if we right mouse click now, let's see what the market's done. Well, it rallied up, but look where the high was, right at that weekly resistance. So now if we go down to the daily chart, you can see that that VS or daily VS sell came right in at weekly resistance. So is it any surprise that the markets have declined? Well, they were coming off weekly resistance, so no, this was a logical place where the market was likely to reverse to. Let's have a look at the FTSE. The FTSE again has had a sharp decline here. No particular sell setups on the daily chart, but if we go out to the weekly chart to get a slightly longer term perspective, we can see on the FTSE the market has been quite weak for a long time. What do I mean by that? Well, if we go back to last year, take a DP off this previous high, you can see that the all-time high of the FTSE came in here, right at DP resistance. The market then declined down. Where did it decline down to? Well, if we take the DP off the previous low, remember this is the last swing into the high. So that was the DP off there. Remember, these DPs are on the chart in advance. And look where support came in. Support came in right at that level. But then look at the rally. This is the interesting thing. The rally has then unfolded back up here in an ABC correction. So if I do Elliott wave intermediate, can you see how that rally up was a corrective pattern? An ABC pattern is corrective. And in particular, oops, I didn't mean to take those DPs off. Sorry about that. Just leave those on. So the interesting thing is this has now been found as a TS3 or W3 trade setup. This is interesting because if I right mouse click and do analysis now, what it means is that the British stock market on the weekly time frame was anticipating a wave 3 or a strong decline. Why is this wave 3 decline? Well, this was the start of the sequence. The initial move down would be wave 1. The corrective rally up here would be an ABC correction, which unfolds typically in a wave 2. So this is typically a wave 2. After a wave 2, you tend to get a wave 3 swing, which is normally the strongest and longest in a completed 5-wave sequence. So there was on the FTSE, on the weekly time frame, there was definitely signs that the market was in a weakening position and a decline was likely to unfold. But the most important one was the DAX, where you can see again on the weekly time frame, we were basically right at weekly DP resistance. So even though this decline has come in here quite sharply and has been attributed to the coronavirus scares across the world, technically there was early warning signs that this was an area of where a reversal was likely to happen. So there was weakness coming in here on the German stock market, with on the weekly chart would come into the weekly DP high, and also weakness on the British stock market, the FTSE, where we were coming off a major high at DP resistance back here last year, and even more significant, earlier this year, a W3 or wave 3 trade set up to signal a further decline here. So even though it's been a very sharp decline, it has come off areas of where we would anticipate a particular reversal.